criminal investigation, the fact patterns that come up in the course of the investigation by the IRS follow a number of different paths. One area is that the extent of the undeclared income. If it's a huge amount of undeclared income, a person is more likely to be charged than if it's a relatively small amount. The larger the amount, the more likely the IRS will take issue with it. The IRS also will become interested if there are deceptive accounting practices, if there is an effort to disguise income going to a business owner, to disguise wages that were received by an individual. If there are other types of entries in the books that disguise or conceal or camouflage the true entries, whether it's for income or whether it's to state an expense that isn't properly an expense. If there's a double set of books, that's a classic example. If there's a set of books that the company keeps for its own use internally and a second set that's presented to the tax preparer, if the IRS receives that evidence, they'll look at that as a criminal case. Offshore business accounts are a very active area by the IRS now. There's a requirement that a taxpayer file a federal form if he has a federal bank, has an overseas bank account. If he has an overseas bank account, he needs to declare that. If he declares it, the IRS is going to be interested in that bank account. If the IRS receives information that he has a bank account overseas and doesn't declare it, then that can be prosecuted as a failure to file that report in the tax evasion context. So there are a number of varieties of cases that I've been involved with that involve those sorts of facts.